Hey there, it's Walter here from the Naked Forex Now forum, and I just wanted to go over some of the questions here that a couple of traders have posted. Marky, I know who that is, was asking about the stop loss and take profit placement. And Ash Mick, who I also know who that is, Ashley was asking the same question, which is basically we don't really know where our stop loss is in advance because the high or the low of the entry candle is gonna vary when you get triggered, and that's exactly right. So anyway, let's jump into the charts, and I'll show you some examples here just to make it clear. I'm sure that a lot of people understand what's going on because they watched Roberto's webinar, but the point I want to make here is that the system's quite simple, and there's a little bit of confusion about the alert candle and the trigger candle, so hopefully that we can figure out that right now. So I've got a 4-hour chart here on the Aussie dollar, and I've got my simple 25 simple moving average. When the market goes above the 25 simple moving average and the simple moving average starts sloping upward, I say, okay, I'm in an uptrend. So somewhere between this candle and this candle, I probably would say, okay, I'm in an uptrend now. I want to be looking for buy signals. And then somewhere over here, I might go, okay, now I'm in a downtrend. Somewhere around this candle or even maybe this candle, I'm saying, okay, I'm in a downtrend. It starts going down. Maybe because it starts chopping around on either side of the moving average, I say, well, I don't know, it's getting a little bit choppy. Even though the moving average is going down, and maybe at this stage, I say, okay, now I'm in a downtrend. The market actually broke lower than the moving average, and it's sloping downward rather nicely here. And the other thing is this wick kind of came up and retouched that moving average, which is always nice, just a sort of confirmation that the market thought it wanted to go long, but then just totally collapsed. So here's a 1-hour chart here on the same pair, the Aussie dollar. And what I want to talk about here is an entry. This is the open of the Asian session. Okay, so basically what ends up happening here is you get your London session comes in right around here, right around these candles right here. So this is Asia and then London, and then actually this candle right here is the New York open. And I remember this because I was watching it quite closely, in fact. So the market prints a bearish candle here, but more importantly from Roberto's point of view is it's given us 2 up candles, and remember we're looking for 2 or more candles counter trend or against the dominant direction, which we've established is down because the 4-hour tells us it's down. We get 2 bullish candles, 2 blue candles, then we get the red. This candle right here with the red arrow is the alert candle, and it's telling me, all right, you know what, I need to get ready. I need to start taking a sell trade perhaps, or at least get ready for it because we're ready. It's happening. Now that was the retracement, and now we're going to get the move with the dominant move in the market. So now what happens, like, okay, well, where's my sell? Well, it's based on the close of the alert candle. You can see the close of the alert candle here is 103.09. So that means that my sell price is 103.01, which is signified right here by this green line. And I'm going to make it thick, and I'm going to make it green, and it's going to be obvious. And it's right there. Okay, so that's my sell price. Now I've got to place my stop, and my stop gets placed as soon as I get triggered. You can see that the market actually does trigger right here on this candle. This candle clearly breaches my sell price. So now I go, okay, well, what's the high on this candle? Well, the high, it turns out the high is 103.10. So I put my stop loss 10 pips higher at 103.20. And this line is going to be red, it's going to be thick, and it's going to be obvious that it's a stop placement right there. So now, what am I looking for? Well, I'm only really looking for about 10 pips. So if I sold at 103.01, I can take profit at around 90 because, you know, given the spread and everything on this pair, that's going to give me 10 pips. Or down here at 85, that's going to give me 15 pips as well. So you can see that it triggered here, it went lower, it didn't quite it actually did get to really close to my target here on the trigger candle, but it may not have cashed me out depending on the spread. It was really, really close, but this second candle certainly would have. In fact, had I held on for 15, even through a little bit of a drawdown here, I would have been cashed out. So my risk on this trade from here, the sell price at 103.01 to my stop loss at 103.20 is 19 pips. And my reward, if I had chosen to get out at 15 pips, is 15 pips. So it's not 1-to-1, but again, the idea here is that I'm trading pullbacks against the dominant move, which is a downward move on the 4-hour chart, an upward move on the 1-hour chart, followed by an alert that perhaps this weak upward move is going to die out, and that's exactly what happened here. You can see you get another one here at the end of the New York session, which is what Roberto talks about all the time, his bread and butter trades. Then you get into the Asian session here, and then it sort of chops around. That was yesterday. And now here we are in the Asian session again. So at this stage, remember, this pair has been going down for a long time. If it were me, I would be looking for critical support and resistance levels. So if I'm looking at, and I don't want to speak for Roberto here, but if I'm looking at this chart, I'm thinking, okay, the market bounced over here at 101.75 or so. So we've come really close there. I wouldn't be surprised if we found a little bit of upward momentum somewhere around here. I know that today's Asian candle has not quite been as low as 101.75, but it has been as low as 101.81. So it's come within 6 pips of that area. So maybe we get another probe down here during the European session, and maybe not. But the point is, at this stage, I would be a little bit concerned about taking more sell trades, just because I know what's happened at this level in the past. And if I go back, there's been quite a few turnarounds around this level here. So I probably would be a little bit leery of piling it on right now. But again, I don't want to speak for Roberto. At this stage, I would probably be looking for a counter trend move, depending on what happens, during the European Open. That will be the clear clue. The other thing is that, remember, during this Asian session, we've had, whoops, this is the wrong chart, isn't it? I want to go back to that 4-hour, or the 1 hour. During the Asian session today, we've pretty much had a down move. So the Asian market opened right here at 102.13, and it's gone down overall. It's gone down 30 pips. Right now, it's only down about 6 pips, but the overall move in the day so far has been a down move, so I wouldn't be surprised to see an up move. You can kind of see that yesterday, where the Asian market went down yesterday, and then it really tried to go higher, but when you're in a strong downtrend, those moves, those cycles up actually end up being sort of weak, blunted, little baby moves, and that's kind of what we have here in this consolidation. I know I'm kind of rambling, so I'm going to stop, but I just wanted to point out, with an example of the 1 hour system that Roberto uses, that you have here an opportunity to get in a great trade based on his trading system, because you're essentially trading with the 4-hour move, the strong 4-hour trend, and then you get a weak little retracement on the 1 hour, and that's your signal. That's the alert candle. That's the trigger candle. That's the stop loss. That's the take profit, and that's the price that we get in at. Hopefully that makes sense, everyone. I hope you have a wonderful trading week, and we'll see you soon.